Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is February 4th, 2019. We're going to look at copper tonight. The ETF is CPER for those that would rather trade the ETFs. The reason we're looking at this market is that it's had a nice little run as of late, but it's going to run into a little bit of resistance. But there's enough indicators that are out there that tell me that there's a possibility that once we run into this resistance, take a bit of a breather in the coming weeks, we could see potentially a nice pop to the market. But we're first going to have to run into this resistance. So let's look at a couple of indicators first, just to give you an idea as to what's going on. When it comes to the trends, we get a mixed bag here: short up, intermediate down, and we've got a flattening of the longer term trend. So that's why we have this little asterisk here, because the market has a mixed trend. Combine that mixed trend with the flat technical rating, and that's always a key for me. I'm always looking for what's not there. If you have a really strong market, a lot of the money has been made. It's the markets that are quiet, that are not really showing too much. Those are the ones that have the potential. So with this flat technical rating, that's actually potentially a good thing once we get past this this support or resistance level we're going to be running into. Let me just show you a couple of things here just to give some perspective. This is our depth gauge, which is a rolling underwater volume index, for this being copper. You can see that the blue line represents kind of the volume, not volume in terms of trading action, but volume as far as the amount of weight that's on this particular market, specifically when it comes to price action. So the fact that the blue line is basing and has based in the past but is now basing now, we have a current condition where the market is neutral or mixed, and so that has some potential for the market to really start to rally. Anytime it bases, you're going to find that after we have this little bit of a breather, that there could be some nice upside potential here. The other thing I'll point out is that when we look at our watch list, we have copper right through here, which is in that neutral phase. So wheat, soybean meal, corn, and copper, these four markets are in a kind of a limbo period where that has some potential to it, and that potential could be extreme movements to the market. The reason I like this, again, it's neutral. We have 18 different alerts that we can look at, and when none of them or very few of them are triggering, it means that there's ambiguity out there, and ambiguity typically is what is the leading indicator for that of a big move, a new trend, in other words. And so we're at this point right now where the market, copper, has got this kind of neutral phase when it comes to our master watch list. Right now, for ourselves, the systems are long the market. We've been able to shred some of our short positions, and we're officially long the market based on a pattern-based system. And the pattern-based is important because pattern-based often occur in a little bit of a consolidation, and those often breed into that of a trend, or at least the next base would be a swing-based type system. So we go from one trading style to another trading style, and obviously there can be some overlap. So in the early stages, it's the pattern-based systems that will dictate whether or not there's the beginnings of something. So again, I'm leading into something that's happening here with copper. So here's daily bars for copper. You can see a long sideways consolidation, and we have resistance here. And so for those of you that are new to my deep dive, what we do is we give a rating or a strength level to all of our support and resistance level. So this one's at 39 way back here, and the current one is at 31. Those are strong numbers. So that means that the resistance could be difficult to break through. But if we're able to break through it and then come back and find it as support, that will bode well for the longer term trend to the market. So I'll give you an idea as to what this number is right through here. This resistance level, the magenta line, that's at 2.8418. That's what this level is right here. And so that's the number. That's the resistance level you're going to want to look at. The one further back here is at 8850. right through here, and then we have another one 10. So if you combine all of those together, we have some major resistance we're running into. We were able to break above the 50-day moving average. We're now going to find additional resistance with this gray line right through here. That's the 200-day moving average. So I would suspect that there's going to be an intersection here soon, both in the resistance, this magenta dotted line, along with the 200-day moving average. And once we get to that level, the market, those pattern-based systems may unwind. But if we're able to break through it on a closing bar basis, then we could start to see some swing-based systems start to trigger and maybe some trend-based systems start to trigger. But a lot of this is just going to deal with this interaction. So with the systems being long, I'm just letting you know that we're going to probably find some resistance. The systems could start to unwind themselves. We'll see how they interact with this resistance level, and then from this, a break above this could lead into eventually a nice, truly strong trend. So we're in the early stages right now, but this is at least some of the things that you should be looking at. So with that, what we'll do is we will take a look at some more markets tomorrow, because there's enough that's really going on. We could be looking at hogs. Certainly the grains have some interesting aspects to them, but with copper finding that resistance level and the market having kind of flattish period here, similar to that of the Canadian dollar, anytime you see this flat technical rating combined with mixed different types of trends, those are usually the markets you want to focus on, because between that and the watch list, those are the markets that are typically going to take a breather, or they're just doing a lot of nothing. And from that nothing, that's where things start to emerge, as opposed to waiting for it to have occurred and then going back in time and saying, I knew it. Well, this is where you start to look at these markets and really focus on them, because this is where the opportunity is. So we'll see how things kind of play out here in the short term, with copper finding some resistance to the market. We'll see how the systems react to it. So by all means, just continue to watch the systems, and we will take a look at another market tomorrow. Thanks very much. Bye-bye.